Hello everyone and welcome to Day Trader S&P 500. Today is February 23rd, the year 2021, and this is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top-ranked stock market timers. And before we forget, reminder to hit that subscribe button. Don't forget the reminder bell and the like button. We appreciate you guys patronizing our channel. There is a like button down there, so go ahead and hit it. We appreciate it. Got a lot to cover today. Let's get a couple other things out of the way here first. You can see our 3-year track record for the day trading service. We moved our futures over to Striker Securities as I average over 700 trades a year. So if you don't want to sit around and watch your monitor all day, you can contact Striker Securities. They auto-trade our futures signals. Also, been in business since 1997 with Woodson Wave Report. We have an annual subscription for $233 a year. We have monthly reports plus special interim reports. Put one out today. Our monthly subscription is $144 a month. Reports are put out virtually every day, sometimes more than twice a day. I do a post and a pre-market report sometimes too. There's our old website and there's our new website coming. Okay, we have a lot to cover. Big day today, so let's get into the S&P 500 analysis. I want to show you guys a couple different things and see what you think. I want to let you know that last week, I think it was on Friday, I had a different wave count, at least to our subscribers, where I had wave 1 down here, wave 2 here, wave 3 up here, and wave 4 down here. Let me get that a little tighter. There we go. Let's change the degree. I don't like that degree. It's too small. We'll go with minuet. Okay. And then Monday or Tuesday moved wave 1 up to here because it just didn't look right. So that moved our make or break from here. You can see the dotted line across to here. And as you can see, you may have guessed already, we broke the make or break. We're going to leave this here. I want to do a little analysis here. So we've got our Fibonacci extension. Well, that would move 2. Well, let me just do this first so we don't mess that up. There's 1, there's 2. You can see 3 fell short. And I failed to mention that we actually, this looks way, way better. Okay, let's get into this here. How about that for a wave count? Okay, and 2 goes down here. So we have a 3 that fell short of ideal 1-to-1 relationship, but 3 can be shorter. It just can't be the shortest. And you can see this looks like, let me move this 5 up here. A lot happened today. This looks like an ending diagonal triangle. Okay, we've got 5 waves up on each of this. 1, 2, 3, 4, 5, and that would be 1 lesser degree. Let me clean that up over there. Let's make it in sub-minuet. There we go. Okay, so there's 1, 2, 3. There's 4, and there's 1, 2, 3, 4, 5. An ending diagonal triangle. Okay, stay with me on this. All right. So this is our bearish count, and you can see we've got a 1, 2, 3, 4, 5 with an overlap here, and then we've got a retracement, and then a 1, 2, 3, 4, 5. Okay, there's a couple different ways to count that. We could count this as a series of 1s and 2s with a leading diagonal triangle because 4 overlaps 1. Let me just put that in before I get too far ahead of myself here. There we go. As you can see, wave 4 high is higher than the wave 1 low, which is here. Move that up a little bit. Okay, so this would be an ending diagonal triangle to end the move up, followed by a leading diagonal triangle to begin the next wave down. Then we have a correction up here, and then another 5 waves down. So let me put those in here real quick. Okay, and then we start here. We get a 1, 2, and a 3, and that 4 stays below the wave 1 high because it can't be a leading diagonal triangle because it's not the first wave. Okay, even though that 4 looks like it's, let's get that out of there. That 4 looks like it's above the 1. It is not, okay? The 1 is up here and the 4 is down here. Okay, so we could call this A, B, C, and done. We could call this 1 and 2 and 1 and 2. And that's how we're going to label this bearish count. Give me a minute here, and we'll do this as wave 1 and wave 2, and then 3, 4, and 5 off here in the distance, and then this one subdivides into 1 and 2. So it's a series of 1s and 2s. Hope I don't confuse you guys with that. There's 1, 2, and then there's 1, 2, and then we get a 3, 4, and 5. Okay, this would be hard to count as 4 because it would overlap the 1, and we'd have another diagonal triangle. So this looks like a series of 1s and 2s, okay? So that is the bearish count because we broke the make or break right here, as you can see, and then we have a series of 1s and 2s and 1s and 2s. There's 1, there's 2, there's 1, there's 2. And let's see where that 2 goes for a retracement level. Okay, and that is 2 up there, and that takes us just past the 618. Okay, as it always is with Elliott Wave and Fibonacci, where is this count wrong? This count is wrong when this market goes above here. Okay, because this wave, if this is 1 and 2 and 1 and 2, 2 cannot retrace more than 100% of 1. So the make or break for this count is that high, which is 39.30. Okay, we expect this to go down. Then you would see a 3 of 3, which would be a very swift and sharp decline. So we should know pretty early if this wave count is right or not. At least, if not tomorrow, definitely by the end of the week. Okay, that is the bearish count with the make or break. Okay, let's remove all these drawings and let's do the bullish count, and the bullish count will be like it was before, with a 1 here, 2 down here, a 3 up here, and a 4 down here. As you can see, this 4 does not penetrate the price territory of wave 1, and we get a Fibonacci retracement of this third wave, and it falls almost right at the 618. And then we can look at the Fibonacci extension. We can call this A, B, and C. You can see that goes just past the 1618. So let's get this line out of the way. There's too many lines in here. Okay, and let's call this, let's get in our wave count here. Show you guys a couple different things here. There's our A, there's our B, there's our C, and there's 4. 4 holds above 1. Okay, that's a huge 3. Okay, and remember we had this other one counting as an ending diagonal and a beginning diagonal. So actually both counts work. Okay, they're both in play. Where is this one wrong? Well, this one's wrong where this again crosses the make or break to wave 1 high, or it goes below obviously this low, then it's, you know, game over. That low is 36.94. Okay, I'm curious what you guys think. So if you want to leave a comment, you think it's a bullish count? Do you think the top actually came in on the February 16th 39.50 high, which was 46 points shy of our ideal Fibonacci 39.96 target, and we've begun the retracement here? Or is this bullish count intact, and after 4 we're going to go up and we're going to cross over, I'll make that a little bit better there, cross over that 39.50 high and get to 39.96? Both counts are in play. I wouldn't be surprised by either one. I'll let you guys tell me what you think on this, okay? Our subscribers got an alert tonight right before I started doing this report to where we are on that. And then I want to show you too the futures, because they compare pretty closely. And in the futures, you can see it topped at 11 o'clock at night on the 15th just before the cash market topped on the 16th back here, okay, at the open. And in the futures, this is the March futures, you can see a 1, 2, 3, 4, 5. There's a 1. You can see a 2 up. You can see a 1, 2, 3, 4, 5. You can count that as 1 and 2 and 1 and 2, or as I have it here, 1, 2, 3, and 4. Of course, 4 would have to stay below this wave 1 low here, which is 38.96. And so far it has. There's 38.92. So that was really close, okay? So this could be a series of 1s and 2s, or it could be a 1, 2, 3, and a 4, and then we would see a 5 down. Okay, that brings up the point, what if it is the 1, 2, 3, 4, 5? What is the fifth wave target? If that's 1 and that's 2, you can see 3 went over 1.618. But if that's 4, where could we expect 5 to go? And we get 37.86 would be the ideal target. Obviously, it's got to go below the wave 3 low. Let me move that up a little bit and move that up a little bit so it's not too confusing. There we go. Okay, so if it's 1, 2, 3, and 4, that's what we're looking at. Otherwise, it's a series of 1s and 2s, just like the cash over there. Let me cancel that out. And I want to show you guys what I put together for you here. Here is the cash hourly and the March futures S&P. You can see that ending diagonal triangle there, and then a 1, 2, 3, 4, 5. That's a leading diagonal. You can see 4 goes above the wave 1 low. Okay, so we got 1 and 2, and then again 1 of 3 and 2 of 3. This would imply that wave 3 of 3 is at hand, and it should be a sharp, swift decline. Again, we should know relatively early. And you can see here the E-mini March futures. You can see we have a clean 5 waves down here with a 1 down, a 2 up. I don't know if I got that in there. Okay, and then a 1, 2, 3, 4, 5. 1 of 3 and 2 of 3. Of course, you saw the other one. We could count it as 1, 2, 3, 4. So a lot of things are in play. You can see, again, the retracement here is just over to 618 on both of these counts. I really like how the futures has a clean 5 waves, no leading diagonal or ending diagonal, but it would make sense if this cash market ended in an ending diagonal and began with a leading or beginning diagonal triangle. Both are in play. Okay, let me move on here. Let's see, wait, there's something else I wanted to show you guys. Let's see, we got this here. Yeah, there's our old make or break. You can see you used to have the one here, now it's here. We're going with it, okay? So that's what we have there. What else did we have here? Of course, our Fibonacci time spiral. You can see it caught. Okay, highs and lows, alternating highs and lows. A lot of review for you guys, but then it caught that wave 1 high, that wave 3 high. And if the next one was a slippage of 21, which is a little bit of a stretch, but it pointed to that weekend of 2/13, which was a Saturday. Sunday was the 14th. 15th was Monday, which was a holiday. So the market topped as close to that as it could because it wasn't open over the weekend. So, and that is your ending diagonal triangle up in there, okay? The 216 high. Let me get back to that on the S&P, and I erase that, but it is back over here. Okay, that's a primary, or that is a bearish count, and the other one is a bullish count. I want to cover one more stock, and there's a few more I'll catch up on. I want to look at Microsoft, okay? So we have everything counts from March low. You can see we have a 1 up, a 2 down, a 3 up into the September Labor Day weekend high, like everything else, a 4 down, and this could be a 5 up. This is very choppy here, but let me get some. I like to go by Fibonacci Extensions just to see what we're looking at, because the market likes to go in Fibonacci multiples and retracements. You can see Wave 3 there. You can see, look at there. 5 is, wow, that's a multiple right there of a 1.618. 3 did more than 1, but not quite. 1.618. If we put this on the wave 4, there you go. Wave 5 equals wave 1. And we could see overlap in that too. That's real choppy over there. That's almost sideways, but boy, it busted out, didn't it? We could call that complete. It's if the Qs I think we saw could be complete, and Microsoft is complete. You can see a rollover. We had Tesla rolling over. We had gold topping early. We got the futures look like S&P futures went over. So that's where we are. Boy, I really want to tell you what I think, but I want to know what you guys think, okay? I'll put it out in the next video, but we got our bullish count and our bearish count on the S&P, and we got the side-by-side stuff here with the futures and with the cash account, okay? We'll give you an update again soon, cover some more of those stocks. Until next time, take care, everyone.